Everything. All right. So the reason I've been focusing on gold is, see, one thing I've discovered about trading is, trust me, you might be good with trading, you might know what you're doing and all that, but then very little things can knock you off balance. And some of the things are having so many markets that you're working on, that you're focusing on at the same time. Those kinds of
Yeah,
things will really fuck you up. Because one thing is, if you're focusing on a very limited amount of pairs or markets, you tend to master them. You tend to know what you're waiting for, not just randomly going to different markets. So I see a lot of people have 7, 8, 9 markets that are going through. Those kind of people can never be profitable because you can never really know what you're really waiting for. Uh, People used to have this thing, fear of missing out. See, I am
yeah,
not
FOMO.
scared. Yeah, FOMO. I'm not scared of missing out on any trade. If see, I've missed out on important nice trades before. Who is this? Let me mute this person. Please, if you are not saying anything, just mute your mic, please. All right. So like I was saying, got it. Okay. So I am not scared of missing out, of losing out on trade and all that. So let's get started. Get into what we have for us for today, actually. And see, this whole Zoom meeting is him or targeted to gold. How I actually do those entries, how I actually do those things, right? And guys, it is not that difficult. It is not that difficult. That's what I always try to tell people. It is not difficult. I'm going to simplify it for you guys. It's not going to be one day. Is this thing recording? Let me even confirm if it's recording. Okay, it's recording. All right. So it's not going to be a day thing because we are going to really talk about quite some few things. I'm going to talk about from the genesis, understanding the whole thing. You really need to understand how this whole thing works before you can then understand entry, because entry is just kind of the most important part of the whole thing here. But you need to understand how what I'm actually looking at for first before we can now talk about entry. So I'm going to get into the whole thing. So let's go to let's go to Euro USD. I'm going to use Euro USD for instance. We're going to come back to gold, but then let's go to Euro USD for instance. And I'm going to be showing us something from here. Now, there are just very few things that we're going to talk about. Now, again, trading is not complicated. It's just people that make it complicated, but it is not that complicated. People usually make it complicated for themselves and for others. Now, let me show you. These are those few things that we need to focus on. And if we are able to get through these things and we understand them, right? And we understand them, you're going to find out that you start becoming profitable. And what is the first thing? Very simple, market structure. Market structure. If I've gone through my videos on YouTube, you would know that I talk about market structure a lot because trust me, like I used to say, market structure is the foundation of forex trading, right? It's the foundation of forex trading. It's like you want to build a house. First thing you need to do is lay the foundation. Market structure is just the foundation. If you do not understand or know what market structure is, trust me, there are a lot of things that you will not understand. If I'm talking about anything else, other block, talking about anything else, breaker block, liquidity, anything else I'll talk about, as long as you do not understand market structure, you will not understand them. All right. So we're going to talk about market structure, and then we're going to talk about points of interest. This topic is not stressed enough. We don't talk about this topic. It's like I don't know what English to use. This topic is just not talked about a lot, and it's so painful because this lack of understanding of point of interest has caused so many people to has prevent so many people from being profitable because they just do not understand this concept. All right, and that's one thing we're going to be doing here, understanding all these things one after the other. And then the next thing we're going to be talking about is uh um liquidity. This one too is a very important topic, of course, very, very important. That's why That is why I'm giving it its own space. Now, a lot of people will say, what about other block? What about fair value gap? It is under point of interest. A lot of people will say, what about break of structure, change of character? All those ones are under market structure. The reason I'm giving liquidity its own space is because it is very, very important. Very, very important. So I'm not just adding liquidity to all this ones. No, I'm giving it its own topic. I'm giving it its own space because liquidity is also equally very, very important. So the next thing we're going to talk about after liquidity is top-down analysis. Top-down analysis. Now, also under this one is we can also call this time frame analysis, right? We need to understand how buyers of the market, right? How the buyers of the market intertwine with time frame, all right? And that is going to top-down analysis is going to help us to understand that, all right? So that's another important topic that people really get wrong, and then it fucks them up, right? So the next thing we're going to talk about after this top-down analysis is we're going to then talk about entry, which is kind of the most important when we're talking about how to flip on gold, right? Entry is also very important because you can know everything, all these topics, you can know everything, but you just do not understand how to enter the market. You just don't know when exactly to enter the market, all right? Because fear of missing out, we really prevent you from a lot of things. But if you have a structure, if you have something you're actually looking at, if you have it a structure, like I said, you'll be able to enter trades confidently, and then you'll be able to do what you're supposed to do. All right, so let's get started. Again, we cannot talk about everything here today. So this whole section is not just going to be a one-day thing, right? It's not a one-day thing. It's not a one-day class because we cannot talk about everything here just in one day. Guys, are you following me? Are you understanding what I'm saying, please?
Yeah, you are here.
All right. So we cannot just do everything in one day. But trust me, understanding this whole thing, you know, a lot of people will feel like, how am I really doing this whole thing that I'm doing, right? I post all the things and all that. How am I really doing that? One, because I am a very disciplined trader. I focus on just one market. I see early last year, I still trade few other markets. Trust me, if you check on Euro USD now, you're going to see some nice opportunity and all that. But then I just, towards the end of this year, God gave me one crazy profit that I just felt like I just need to focus on this master crafts and master gold. I don't see people just want to take the whole profit in the first market. This is not possible. You want to take profit from Euro USD. See, I don't just even check other markets to now see opportunities and want to take them. I just focus on one. If I'm not seeing opportunities on gold, I'm not taking gold. I'm not taking trades until I find and see opportunity. And that has made me master the art of trading it. And that's what I'm about to show you. All right. So, like I was saying, what is market structure? Right. Now, under market structure, let me bring this one out. Market structure. Like I said, market structure is the foundation of forex trading. So under market structure, we are going to be talking about, there's no way we talk about market structure that we're not going to talk about break of structure. And then there's no way we're going to talk about break of structure that we will not talk about change of character. You're going to see how all this actually what it means and how that actually affects whatever everything that we're going to be doing here today. For the next few weeks, because this is going to last for weeks, just 2-3 weeks. For the next 2 to 3 weeks, you're going to see how this actually affects everything that we're doing, that we're going to be doing for the next few weeks. That's why it is a very, very important topic. So, what is market structure? Market structure is simply the movement of the forex market. It is very simple and straightforward. Because and with how simple and straightforward it is, it's people still find it very difficult. A lot of people still find it very difficult because you just do not understand it. Now, let me show you. Let me clarify it. I'm going to try and clarify it to as low. I'm going to go so low so you can really understand this whole thing properly. Now, the first market will move in one of these three ways. It is either it is going up. We call this an uptrend. Of course, a lot of you know this, but listen attentively. You might get something you don't just understand because the tiniest details in all these things matters. It's either it is going up, right? It is going down. We call this downward movement a downtrend, or it is going sideways. You're going to see why what this sideways movement means and why it's important. Now, when we start talking about liquidity, we're going to be looking at this sideways movement a lot when we start talking about liquidity, all right? So that is what happens, right? Is that it is going up, going down, or going sideways, right? So let's take this sideways out of the picture. For instance, we're going to be focusing on the instance when the market is going up, trending to the upside. We call that an uptrend, or trending to the downside. We call this a downtrend. So let's look at these two instances. What happens when the market is in an uptrend? What happens when it is going up? What is really happening? Now, again, like I said, it is simple, but it is very technical if you do not get it. Now, if the market is in an uptrend, again, common sense. Let's try and apply common sense here. Uptrend, it means it is going up. Uptrend, it is trending to the upside. English, basic, simple English. Uptrend, it is trending to the upside. Now, what happens when the market is trending to the upside? First, when I say uptrend, you know it is going up. So I'm expecting the market to move to the upside. Right? It goes up like this, gets to a level. Now, one thing you should understand is that I don't care what the market is, whether gold, whether Bitcoin, I do not care what it is. It goes up, gets to a point, it get exhausted, and I'm going to tell you why this whole exhaustion thing happens when we start getting to other block and fair value gap, right? You're going to understand why this happens. But then let's just follow the flow like this. It gets to a point, it gets exhausted, it gives us what? A pullback. I'm going to tell you why this pullback happens when we start getting to other block and fair value gap. It gives you what? A pullback. It will always happen. Gives you a pullback, and then it continue going up. And that will always happen. Gives you a pullback, continue going up. A pullback, continue going up. Now, again, this is where so many new traders get it wrong. If you see trainings and videos like this that explain this as market structure, say, okay, you're looking for a pullback and a continuation. Now, there are a lot of things that is related to this, right? There's a lot of things, but this is just basic market structure. Guys, note, basic market structure. Oh, I didn't put something here. We're still going to talk about, after change of character, we're going to then talk about advanced market structure. Advanced market structure. And then you're going to see a lot of things more clearly, because a lot of people will say, okay, this is what's happening. See, this is what can happen, right? This is what can happen later on. We're still going to come back to, I'm not going to go too deep into this until we get to advanced market structure, but let me show you an example of this. You see something like this. We see it go up, give us a pullback, go up, give us a pullback. Sometimes it do something like this, and then like this, and then like this. And this is like, what is going on here, right? What is going on here? What happens? So we're going to understand this whole thing properly. There's a lot of explanation. You just need to understand all this. So let me not take us too far. Let's come back to basic market structure, because guys, you still need to understand the basic market structure before you can understand the advanced market structure. So let's get back to basic market structure. In an uptrend, we see a push to the upside, a pullback, a continuation, a pullback, a continuation like this. This is what we're expecting to see in an uptrend. Guys, note, it might not always be diagram perfect like this, but it is the same concept. And again, I'm still going to be showing you all these things on the chart. This whole lecture is about you understanding. Trust me, you will. Now let's continue. Now let's call it its names, right? Now, if it's going up, it gives us what? A high. We call this a high, a pullback, like this, a low. Now, for this market, common sense, please follow me here. For this market to continue, for me to say this market has continued its uptrend, for me to say this market is still an uptrend, it needs to give me a new high that is higher than the previous highest point. This is the previous or the recent highest point. For this market to be to have continued its uptrend, for me to say this market has continued moving to the upside, it needs to give me what? A new highest point that is higher than this current highest point. That means it has continued going up. Common sense. It has continued going up. Now, this new high point is called the higher high, H8. Why is this called the higher high? Because it is higher than the previous highest point. This is the previous highest point. This is the new highest point. That's why it's called the higher high. Now, what are we expecting? A pullback. We get a pullback and a continuation. Once we get a pullback, this pullback becomes what? The higher low, because yes, it is low, but it is higher than the previous lowest point. So in an uptrend, we are always anticipating or expecting to see higher high, higher low, higher high, higher low, higher high, higher low. Do we understand that, please? Do we understand that? Do we understand that? Are you guys listening? Do we understand? Are you guys following me, please? Oh, okay. Let me see. I think I mute you guys. Guys, are you guys following me, please? Are you following me, please? Is it the network or can you guys hear me? Okay. Okay. So let's continue here. Let's continue. Let's continue. All right. So the next thing we're going to talk about is okay, let's continue. So in an uptrend, like I said before, we're always expecting to see higher high, higher low, higher high, higher low, higher high. That's what we're always expecting to see in an uptrend. All right. So in a downtrend, the opposite is what we're expecting to see, right? In a downtrend, we're expecting to see a low, lower high, lower low, lower high, lower low, right? In an uptrend, we're expecting higher high, higher low, higher high, higher low. In a downtrend, we're expecting lower low, lower high, lower low, lower high, lower low, lower high. That's what we're expecting in downtrend. So that's just how the whole thing works. Now let's continue with the market structure. Let's go back to market structure. Now, the next thing we're going to talk about is break of structure, right? Break of structure. So what is break of structure? What is break of structure? Guys, are you guys following me, please?
Yeah, we are here.
Okay, I could not hear you before. All right.
I'm here now.
All right. So let's continue. What then is break of structure? What then is break of structure? So in an uptrend, you already understand that in an uptrend, you're expecting to see higher high, higher low, higher high, higher low, higher high. That's what we're expecting to see in an uptrend. So what then is break of structure in this scenario? Now, before we go to break of structure, let me just talk about break of structure, then I'm going to show you everything on the chart, right? Let me show you. So let's see. In an uptrend, we have high, low. Like I said, for this market to keep being an uptrend, we need to see a new high that is higher than this current highest point. Now, the act at which the market, or the point at which the market breaks this current highest point to give us a new highest point, becomes our break of structure. Now, where's our break of structure in this scenario? This point here. This point becomes our break of structure. Now, guys, you're going to see why this is very important, why this break of structure is very important. It is very, very important. And we're going to be using this a lot. So we're going to see why it is very important. You can call it BOS. So here, what are we expecting here? We're expecting to see higher low, break of structure. So break of structure tells us that the market has continued its uptrend. Now, imagine, let's say you have something like this. I'm coming. This will be our break of structure, the market breaking through here. So what are we expecting here? We're expecting what? The market to give us what? Some kind of pullback. And the market keeps doing something like this. Guys, if as long as the market has not broken through this recent highest point, as long as a break of structure has not happened, everything happening in here is internal structure. Right? The market has not continued its uptrend. When I can say the market has continued its uptrend is when the market gives me a break of structure. Right? Anything that happened in here is what? Internal structure. I can still see, yeah, the market is ranging, it's still an uptrend, but it has not continued its uptrend until we see something like this. Then we can say, yes, the market has continued its uptrend. Now, let me show you an example of this exactly. So let's go to gold back. Let's go to SAUSD and let's see examples of this. All right. So let's go to the daily time frame. Now, let's see this. Like I said before, Hold on, let me just quickly check on my trade right here. Yeah, we're currently at $14,000 on this trade. This is amazing. Let me just post this in the Telegram channel. This is just amazing. For almost $15,000 with $500 that we started from. This is just amazing. I was not expecting this at all. The market, I knew the market. See, we're expecting the market, guys. We're expecting the market to get to this level here. Look at this. And why, guys, the whole reason or the real purpose for this training is to know, how do I know that it is here the market is likely going to get to? How can I tell? That is the question. How can I tell? Right? Because of something we call liquidity. Guys, look at this. Trend line liquidity, right? Look at this. Once we get a breakthrough here, guys, once we get a breakthrough here, the market is coming here, right? So we're gonna get to that. We're gonna get to liquidity, but then let's continue what we're here for. We're expecting the market to at least get to this level, and then we have multiple confirmations for this, guys. We have multiple confirmations for this, right? We have multiple reasons why we think the market is gonna get there. And guys, imagine this. Imagine this. Imagine. Let me show you. One minute. Let me show you. Let's go to the 4-hour time frame. Now look at this. This is my first take profit here, as you can see. And then this is where we anticipate the market is going to get to. Imagine the market actually gets to that level. Do you know the kind of profits we are going to make, guys? Do you know the kind of profits we are going to make? You don't want to miss out on that. Trust me, you do not want to miss out on that. Imagine, we have been taking that profit. We have just been going in and out. We have been taking all this profits. And the market has really been giving us good profit. Imagine the market gets here. Guys, that is a lot of profit. And guys, this is what we're actually anticipating. And I'm going to show you. Let me show you. We're talking about market structure, so you'll be able to understand. Now, look at this. Let me show you. Let me show you. Let me show you. Right? From here, we have our higher high, higher low, higher high, like this, right? So what are we expecting here? We're expecting to see what? A break or structure here, right? Now, guys, look at this. Let me show you this even properly. Let me show you this properly. Hold on. Let me show you this properly so you can actually understand this thing well. Let's do some kind of let's do some back testing. Let's do some back testing. All right, so we can see this properly. Guys, are you following, please?
Yeah.
All right, let's do some let's do some back testing right here. Now, when the market was here, right? The market was here at some time as at a point, and then we have the market giving us a push to the upside like this, and then the market gave us what? A high like this, right? Market give us this high, right? And then this becomes, guys, when we start talking about point of interest, you're going to understand that. Let me quickly even chip point of interest into point of interest is divided into different parts. Let me just chip this in. What I do in this scenario is the market has given me what? Higher high, higher low, higher high. So what I do is I put this line here at my higher low, and then I put this one here as my higher high. Here. Inside here becomes my point of interest. The space that I'm interested in trading, right? Where I'm interested in trading. Now, once we start getting to point of interest, we have not gotten there yet, so I will not talk a lot about that. We then look for what? Where is our other block in this move? In this one gives us clarity. Because we're not expecting the market to get to anywhere around here, right? We're expecting the market to come in. See, anything the market do inside here, as long as it does not break through this one here, it is still an uptrend. We are still anticipating what? A break of structure. As long as it's still an uptrend, right? So look at what's then. Let's see what happened. Let's see what happened. Let's play this. See, the market started coming down, doing its thing. Everything in here is internal structure until we see what? A break of structure. Look at this. This thing get up. We have not seen a break of structure. Now, a lot of people will think, hey, maybe this is a break of structure. Maybe this has changed to a downtrend. Some people will think this is a down, lower, low, lower, high. See, inside internal structure, there's also what? Another structure. You can see higher, high, higher, low inside internal structure. You just need to understand the bigger picture. Once we start getting to time frame analysis, top-down analysis, we are going to understand that better. See, look at, no matter how close it is to this place, as long as it has not broken through this level or this level, this thing still remains an uptrend. We are just still going to anticipate that, yes, it's going to break through here and give us a continuation to the upside. Guys, that is another thing, another mistake a lot of traders do. You need to always follow the trend. See, I do not care what the market is doing. As long as it's an uptrend, it is likely for the market to continue its trend than to give us a trend reversal, right? I will never be anticipating the market breakthrough here. Of course, it can. Can it? Yes. But then I'm going to be looking for opportunities to buy instead of to sell, because look at this. This is a daily time frame. The higher the time frame, the stronger the trend. Now, once we get to top-down analysis, and that's why all those things matters. But once we get to top-down analysis, you're going to then understand why all this, how to use time frame to really understand this whole thing properly, right? But then we are still going to get there. Right? Let's see what then happened. Let's see what then happened. Look at this. The market keep doing its thing. Everything here is internal structure. The market is ranging here. Everything here is internal structure. What am I still anticipating? I'm still anticipating a break. Guys, if you can go back in time, right? If you can go back in my channel or my YouTube channel, when the market was here, we were actually anticipating that the market is going to go up. Guys, I think I'm going to find that video. We did market insights one time. Market insight one time. I think sometime last year, right? If you go back to my YouTube videos, we have been doing this a long time. So when the market was around here, we were saying, yes, we are going to make a lot of profits. We are going to make a lot of profits in this move. And guys, look at this. We made a lot of profit actually in this move. Guys, we did not just enter a trade and let it slide to this upside. No, we're coming in, going out, coming in, going out. But then let's see what happened. Let's see what happened. And then you're going to see exactly why we take this trade, what we see, what we expect, what we wait for before we take. It is not complicated. You just have to understand. Now look at this. It is here we had what? Our break of structure, guys. This is where we had what? Our break of structure. This has now tell us that yes, the market has continued its uptrend. Now, before we continue, let me show you something. We have this higher high, higher low. We now had what? This break of structure. Now, one thing you should understand, and this is the rule of break of structure. Immediately you have a break of structure, you should start anticipating a pullback, because of course we are expected to see what? Higher high and a pullback, higher low, right? Immediately you see what? A break of structure. Immediately a break of structure happens, start anticipating a pullback, because yes, we can never really tell where. Sometimes the break of structure, immediately the break of structure happens, the pullback happens. Remember, I said anticipate break of structure. I'm not saying break of structure happens immediately. I mean, pullback happens immediately, break of structure happens. No, I'm saying anticipate, prepare for a break of structure. I mean, a pullback once a break of structure happens. Now, a break of structure happens like this. I am already anticipating a pullback. I'm expecting, okay, a pullback is going to happen anytime from now. And then there's something called pullback confirmation. There's a way you understand when a pullback is happening, when the pullback has started, and all that. We're going to get to that. So once we see what are we going to expect? At some point, the market is going to give us a pullback. Now let's continue. Yeah, a pullback, because according to market structure, this is higher high, higher low, higher high. We're going to be expecting what? A higher low and then a continuation. And that's what we're going to be expecting, right? So let's see what then happened here. Let's see what then happened here. Now, this is another place a lot of traders make mistake, because they just don't know. They just do not know when a pullback is a pullback, right? A lot of people will think, hey, maybe this is a pullback. Maybe this is a pullback. Any move to the downside is not. See, a lot of people will think any move that happens to the downside is a pullback. No, this is not a pullback. This is just the market doing what? Impulsive retracement. This is not a real pullback. This is not a pullback, right? This is not a pullback. The market is just continuing its trend to the upside. Now look at this. Do you know that, guys? We still have not gotten a pull. See, this move here, this one here is still not a pullback, right? It is still not a pullback. And we're going to be talking about valid and invalid pullback very soon. This is still not the pullback we are waiting for, as you can see. Now, this is what a lot of new traders will think, right? This is what a lot of new traders will think. A lot of new traders will think this is the case. From here, a lot of new traders will think from here we have what? Our higher high, our higher low. Let me do this thing properly. And then you're going to get clarity. You're going to get clarity. A lot of new traders will think this is how it is. All right, this is it. From here, we have our higher high, our higher low, our higher high, our higher low. And then a lot of people will think this is our higher high, and this is our higher low, and then this is our higher high. This is not true. And this is why this fucks a lot of people up, because you would think this is the case. And then look at here, you're going to be expecting to see what? A higher low, right? Because here, you're expecting, oh, the market should give us what? A higher low to around this level, right? And then you're looking for opportunities to buy around this level. But then this is not a real higher. This is not the higher low. The higher low has not happened. This one here, see, if I'm to draw this path here, and I'm going to explain. I'm not just going to tell you, but I'm going to explain, actually. This is just This is it here. Higher high, higher low, higher high. Higher high is still happening. All this one here is just still one move, guys. It's still just one move. Because this one looks like a pullback does not mean it is a pullback. I'm going to explain to you how to know if this one is really a pullback. Let me just quickly show you that. Now, I'm going to tell you that now, but I'll tell you once we get to once we start getting to what's it called? Point of interest. When we start explaining point of interest, you're going to understand that properly, right? I have a tool that you can use to, because now look at this. This is where a lot of people not get it wrong, because you're going to now have something like this. You're going to think higher high, higher low, higher high, and you have something like this, and you think this is a pullback, but this is not actually a pullback. This is just still higher high, higher low, higher high, and then you now see something like this, and that look like what is going on? Because
Exactly.
in the real sense, this is what just happened. Higher high, higher low, higher high, higher low, higher high. But a lot of people would think this is higher low here. And maybe people think this is a change of character. Maybe the market wants to start reversing to the downside and they are looking for opportunities to sell. And they saw this and then they saw a pullback and they are looking for like opportunities to sell. And the market just take them out and continue going up. And they think, what is going on? But then you just did not understand. That is why a lot of people, it's not as if it's not as if you just do not understand. That's why you keep losing to the market. This here is not a higher low, and you're going to understand why this is not a higher low once we start progressing into the whole thing. I don't want to jam pack us with too much information in the beginning, just one step at a time. One step at a time. So we now understand what break of structure is. Here is our break of structure. Here's our break of structure here, right? Break of structure here. The points at which the market breaks the recent highest points to give us what? A new highest point. These are break of structure right here, right? Break of structure tells us that the market has continued its trend until we see a break of structure. All this one here are not any break of structure. They are just international. Until we see a real break of structure, the market break the current highest point to give us what? A new highest point, right? This break here is our break of structure. This point here is our break of structure. This is where the break of structure happens. And the break of structure just tells us that the market has continued its uptrend, right? It tells us the market has continued its uptrend. So that's the importance of break of structure. So let's continue. I hope we're getting this, please. I hope we're getting this. Yeah, so the next thing we're going to talk about here, is change of character. Now, this one is very, very important also. This one is very, see, guys,
Excuse me, sir.
go ahead.
Hello. What I understand, is
Yeah.
this market structure, this break of structure,
Yeah.
it has to pull back like to the extent that we have to reach the middle of the previous high before it continues.
Oh, okay.
Or before you call it what do you call it?
A pullback.
Okay.
Yes.
Listen. Yeah, I see. You said I understand what you just said. Now this is a higher high, higher low. We now have a break of structure. It has to come at least to the beginning of this one here, right? Like this.
Yes. Exactly.
Like this. At least it has to.
Yes, sir.
Before
Yes, sir.
So if it doesn't get to that point, then it's not a proper pullback.
there's not a proper pullback. Yeah. Now again,
Okay.
like I said, once we get to point of interest, I am going to explain how to locate a valid and invalid pullback. I don't want to go too far because this whole thing is one step at a time. I would not want a situation where I will have to come back and explain all this one that I'm explaining. So once we get there, you're going to really then understand, right? And that is, see, one thing with trading is, guys, let me just make this clear. One thing with trading is you need multiple confirmations to be able to be sure that, yes, this is, guys, another thing that you're going to struggle with is you can know this is an uptrend, but then you're expecting a pullback. Where is this pullback going to get to before it continue going up? Right? Now we need multiple confirmations to be able to tell that, yes, it is here the market is going to start going up from. You cannot just rely on one confirmation. Yeah, you can just rely on order block or just fair value gap or just liquidity. No, you need to have multiple confirmation. Let's say we have three confirmation. We know of three confirmations to know, okay, we need three confirmation. At least you need at least two confirmations to be able to tell that, okay, this is what is happening, or let me follow it. You need at least two or three confirmations. And those are the things that we're going to talk about. Like I said, I don't want to choke us with too much information at a time. I want us to take this whole thing one step at a time, follow the topic, the outline like this, and then we're going to understand properly as we move on. Again, that's a very good point. But then we're going to talk more about pullback once we get to this next topic, point of interest. This is a very, very important topic. We're going to talk about more. Now, I'm going to show you multiple confirmations, multiple ways to know if this is a real pullback or not. Multiple, not just one. And they're very easy. Very easy. That's one you mentioned. Is one of them. Yes, it's one, but you cannot just rely on that alone. You cannot just rely on that alone. I'm going to give you instances where that's. Now, one thing with trading is it doesn't respect anyone. Trading is no respecter of any man. So that's why we need multiple confirmations that even if you follow everything right, you can still lose a trade. But then if you follow everything right, out of 10 trades, maybe you lose 2 out of 10. That's still a win. You lose 3 out of 10. That's still a very big win. You understand? Even if you follow everything right, you cannot be 100%. Nobody is 100%. Nobody is an island. You just need to be able to have proper risk management, follow your strategy properly and all that, and you can have very, very good success rate. All right, so let's continue. All right, so let's see here. So the next thing we're going to talk about is change of character. So what is change of character? Change of character, let me just tell you what it is before I show you what it is, right? Or real sense. Change of character tells us when the market has changed its trend. Sometimes the market is an uptrend and it changes from an uptrend to a downtrend or from a downtrend to an uptrend. Change of character tells us when the market has changed its trend from an uptrend to a downtrend or a downtrend to an uptrend. So how does that actually happen? Let me show you a diagram of that first, and then I'm going to show you guys all that, how it happens on the real charts. All right, so with an uptrend, we have something like this: higher high, higher low, higher high, higher low, right? Higher high, right? So this is it, right? So I'm going to talk a bit about point of interest. Now, what is there are multiple things called point of interest, and the one I'm going to focus on is when you see something like this, first thing I want to do is mark up my point of interest, my highest point, the recent highest point, which is this. We're still going to even talk about this highest point very soon. And then the recent lowest points, higher low and higher high. This here is my point of interest. This space here is, guys, this thing, it sounds or looks so easy, so simple, so unimportant, but you have no idea what this is going to save you. Having this kind of clarity, guys, is going to save you a lot. Even with how good I am with trading right now, I still do this. Or mark out my point of interest like this. I still do this all the time. Now, what does this help us do? For this market to continue being an uptrend, we want to see what a pullback like this, and then a continuation, right? The market break the recent highest point to give us a new highest point like this. What if the market did not break the recent highest point to give us a new highest point? What if the market break the recent lowest point to give us a new low like this? What has happened then? A change of character has then happened. A change of character has then happened. This then becomes my change of character. We call this change of character. Now, when change of character happens, it means the market has changed from an uptrend to a downtrend. And when the market changed from an uptrend to a downtrend, what are we expecting in a downtrend? Lower low. I'm not just going to start selling here. When we're expecting lower low, lower high, this is where you start now selling. A continuation, lower low, lower high, lower low, like that. Now, how does the market change this from a downtrend to an uptrend? The same principle. I'm going to mark out my point of interest with recent highest point in this downtrend, and then the recent lowest point in this downtrend. For this market to continue being a downtrend, it needs to give us a pullback and then a continuation. But what if the market did not break the recent lowest point to give us a new low? What if it breaks the recent highest point in a downtrend? A change of character has happened again. And then what do we understand? This is our change of character here. This becomes our change of character. And then in an uptrend, we're not just going to start buying here because we understand market structure now. In an uptrend, we're going to be expecting what? Higher high. We're going to wait for what? A kind of a higher low. And then a continuation, break of structure, higher high, higher low, higher high. So this is how the market has changed from a uptrend to a downtrend and from downtrend to an uptrend because of change of character. Change of character. Well, I'm going to show you guys how this actually happens on the real chart. But before I show you guys what happens on the real chart, how it happens on the real chart, there's something I need to show you though. Because we're talking about pullback. I just really want to chip this in because this is how the market can really confuse you as a trader. Watch this. You have something like this, higher high, higher low. You have this, like this, and then you have this. And then you have this, and then you have this. A lot of people say, oh, this is the change of character I'm waiting for. Higher high, hold on. Like this is the change of character I'm waiting for. Higher high, higher low, higher high, higher low, higher high. Change of character, right? But then what? This is then what will happen. The market will then give you this. What happened here? Because this here is not a valid pullback. It's not a valid pullback. You understand? It's not a valid pullback. So this is not a change of character. This here. So you need to this used to confuse a lot of people a lot. Because this here can now be this is it here. Higher high, higher low, higher high. Now look at how it makes sense now. Higher low, higher high. Do you understand? And according to what, I don't know who brought my notice to that, what the valid pullback is. Look at this. This is the break of structure, right? This one needs to get at least, this one did not get into what? Did not get to the break of structure here. But this did. So this one here becomes the valid pullback. This is not a change of character. This thing here is not a change of character. This is not a change of character at all. So you need to be able to understand that. Guys, are you following me, please?
Yeah.
So let's see examples of this. Let's go back to gold. Let's go back to gold. Let's go back to gold here and see this. Now look at, let's use the same principle here. Let's use the same exact principle here. Look at this. Where is the break of structure here? This is the break of structure here. Right? This is the break of structure. So is this a pullback?
No.
No. Right? No.
Yeah.
Because we still expect the market to give us what? At least come down to around this level. Now, there are different ways to know what the value. Let me just chip that in. Now, we can use what we call, I'm not going to go too deep into this. I just want to really chip this in because we're talking about this now. We can use what we call Fibonacci retracement, right? This is a tool here called Fibonacci, right? And you can just drag this Fibonacci here. This is, okay, let me just do this properly. Now, we need to be able to what? Let me show you first this. Right? Point of interest is very important, right? Like I said before, this is our higher high, higher low, higher high, higher low, like this. Right, so we first get our higher low before we get our higher high. So this is our higher low here. Right, where's our higher high? We cannot really tell which is our higher high here because this one is not fully formed yet. So what we are going to do, we're just going to assume this is our higher. So let's say we assume this place here is our higher high. Let me show you. We're going to take that Fibonacci here when the market was there and we'll bring it here. Let's assume this place is our higher high, right? And we'll bring it right there. For this to be a valid pullback, this here has to at least go beyond 50% of this, Fibonacci here. But look at it did not. So it means this is not the highest point. This is not the higher high. And let's look at this. Still not. So we are expecting, why then is my point of interest here? Why then am I considering this other block? Because it is just below the 50% of the Fibonacci, as you can see. Just below the 50% of the Fibonacci. So we're expecting that at some point the market is going to come down. See, guys, that rule that the other person said, what's your name? Sorry.
Ahmad. His mic is muted.
Okay, it's muted. All right, so
Sir, I can hear you.
what's your name so I can address you by your name?
Ahmed.
Ahmed. So
Yes, sir.
what you explained earlier, yes, it is right. But let me tell you something about trading. Let me tell you something about
Okay,
trading.
sir.
You need to be flexible. See, look at me now. I understand that yes, the
Mhm.
market needs to see. I'll probably be
The
looking
market.
at if you check all this sometimes. If you check this level here, you are not seeing a clear order block in this level. So it means that
Yes,
the
sir.
market might not really get to this level. Now, does that mean the market cannot continue going up? Of course, it will. But then one thing that I'm sure of, that's why you should not have just one confirmation. You should have multiple confirmations. Now, look at this. If the market did
Okay.
not get to this one using that your rule, at least it should it has to get beyond 50%
Beyond 50%.
of this Fibonacci.
Okay.
Do you understand? So for this, let me show
Yes,
you.
sir.
Now, let me show you guys let me show you guys examples. Let me show you guys examples. Let's use another market. Let's use another market. Let's go to Euro USD again. I want to show you guys real examples of this. Let's show real examples of this. All right, let's start from here. Let's start from here where the market was here. So we have let's do some back testing here. Okay, let's do some back testing here. So let's start from here, right?
Okay.
All right. So this is what's the low here, right? This is the low here,
Yes, this
higher
the
low
lower and
here,
higher low.
and then this is a higher high here. Now I'm just going to drag my Fibonacci here like this, and then for this to be a valid pullback, it needs to get to at least surpass. See, it doesn't mean that it has to touch this and
50%.
go up. It needs to go beyond this.
Okay.
So I can even look for
Yeah,
opportunity to sell to around this level. All right. So let's see what then happened. Let's see what then happened. Let me make this a bit faster. Let's see what happened here. You see,
yes,
market
yes,
tap
yes.
into that,
Tap
giving
into
us
the 50%.
exactly. And then look at what happened. Continue going on from there. So the market
Okay.
give us what? Higher high,
That's
higher low.
this Fibonacci. This is what they use it for.
Yes. No, you can use it for a lot of things. You can use it for entry, but this is how I customize it. Because if we go to see again, we are not talking about this one. Yes, once we get there, if you go to the Fibonacci, it has a lot of lines. I just had to customize this like this. Now, let me show you something.
Okay, sir.
Let me show you guys something. So, what are we going to do after we get what something like this? We are going to adjust what our point of interest, higher low, and then we are going to wait for to see what our higher high. We're just going to wait to see what our higher high. So let's see where, and I'm going to show you how to locate what a higher high is, how to know where higher high has actually started. So let's say this one here is our higher high. So what do I do again? My Fibonacci 2, like this. See why
Okay.
point of interest is very important. So for this one to be a valuable, this one needs to get to at least, I'm looking for my point of interest in this level for the market
Okay.
to continue going up in this other half. So let's see what happens. Let's see what happens. Let's see what happens. Now look at this. Guys, a lot of people will think this is where the market wants to start going up. Look at this. The market calm down, start going up. Yeah,
Yeah.
maybe this one will give us a break of structure, but no, look at this. Market drop down like this. Entry, once we get to order block and fair value gap, you are going to understand the whole thing. You are looking for your order block in this level, here, in this order half, here. Nothing concern me at this place. Now here I define my order block on my point of interest here. And the
The
other
middle.
block was just this. Look at the other block here. This is the other block. And then I can now have my entries like this. I can now have the entry like this, my stop loss like this, and targets this high like this. As you can see, because what? I understand this concept. So anything
Okay.
happens here, we know what is going to happen. We know the market has tapped into the other block. We know the market wants to continue its movement to the upside. We know the market is going to give us a break of structure. And look at what happened. Let's see what happened then. You see, The market has given what? Our take profits. Has given us
Yes.
a break of structure there, as you can see. So once the market gives us that, what are we going to do? Adjust what? Our what? Point of interest again. I'm going to wait for the market to give me what? A new high, like that. So let's assume this is it, right? Let's see. And I'm going to show you how to know when. Okay, that is it there. So what am I going to do here? Please mute your mic if you're not saying anything, please. I'm going to find what my Fibonacci 2 again. Look at this. Now, it doesn't mean that if you should tap into the 50%, you should start buying. No, you still need to look for what your order block in this level. Look at, there's liquidity here. We're going to talk about liquidity, and there's order block. This is our order block right here. So we're expecting the market to get to around this level. So let's see. As you can see, I sold around there. I was selling here, and I made profit here that time. That was a long time ago. And then we actually sold here. We made good profit here because we understand the concept. Because we understand the concept. Look at this. Look at that. So you just need to understand the concept. You need to just understand. You need to understand. You need to understand. So let's continue.
But sir,
Yeah, go ahead.
can we get this recording of this session?
You say what?
Can we get the recording of this
Yeah.
this class?
I am recording the section.
Okay, where can I get it?
Yeah, I'm going to send it to you guys in your DM once we are done with the whole section, with the whole class.
Thank you very much, sir.
I'm going to post on YouTube and I'm going to send to you.
Okay, thank you, sir.
Yeah. So let's continue here. So, guys, after the end of this whole trade section, this whole training, you would open the charts, you understand the market properly, and then you would take real trades profitably. Because you're not just entering the market blind. Now look at this. We are expecting the market to give us what? A break of structure here to this upside. So here would have been a perfect entry. I did not enter this one because I've been focusing on gold. Here would have been what? A perfect entry like this. As you can see. And look at the market's already going up. Because we understand the concept. Because we understand. Look at where the market currently is on Euro USD right now. Because we understand the concept. We understand the concept, as you can see. All right. So that's that on that. So let's continue here. So we're talking about change of character. Let's talk about change of character properly. Okay. I'll join this network. Hold on. Okay. All right. So let's continue here. So we're expecting what? Look at this. We're expecting a pullback. Now look at this one here. Let's zoom in on this. Now, when we start getting to top-down analysis, we are then going to understand this whole thing properly. Look at this move happening here. We go down to the 4-hour time frame. Everything happens on all time frames. You can really understand all these things on all time frames. It happens on. You can use the same method for every time frame. Look at this one here. You can see what is happening here. Let's start from here. For instance, we have this from here. We have our higher high, higher low. We have this high, higher high. Let me show you. From here now, we have what? Higher high, higher low. We have this one, higher high. Now, a lot of people will think this is a higher low. No, this is not a higher low. Now, let's see how would I do this? My point of interest here, like this. Or if this one, I can even take this one as my high here, right? Because from here, I'm seeing this one here as one move. As one move, guys. As one move. So if you're thinking this one is higher high, higher low, and this one is a higher high, if this one now break through here now, you think it's a change of character. It is not a change of character, guys. This is my point of interest. And once I get my point of interest, what do? I take my Fibonacci 2 like this. Look at it like this. Now, what am I looking for? I am looking for what? My point of interest in this move. Where's my point of interest? My order block. This is an order block right here.
So how do we understand what kind of candle can we see to understand this is an order block?
We are going to get there. We are not there yet. We are going to get
Okay
there. So
then.
we are going to have a real topic on order block and favor lookup. So don't you get worried about that. It's because I just had to talk about it here. That's why I'm talking about it. All right.
Okay.
So what are we expecting here, guys? We're expecting that this thing comes down to this level before going up like this, give us a break of structure. So we are expecting something like this to happen. This is going to be our entry like this. A stop loss. I take profit. Let me get this Fibonacci off. Something like this. So we're expecting the market to come down to this level, tap into here before it gives us a continuation to that level. Right? Do you understand this? Are we understanding this?
Yes, sir, we are understanding.
All right. So don't get yourself worked up about order block or favor lookup, all those things yet. We are going to then understand them once we get there. I just had to talk about them for you guys to understand this whole thing properly. All right. So let's go back to change of character. Let me show you guys how change of character actually happens. How change of character actually happens. All right. So let's talk about that. Let's go down to the daily time frame. All right. Right, as you can see on the daily time frame, this was previously what a downtrend here, as you can see, was previously a downtrend here, and then it changed to an uptrend. Then let's look for a perfect example here. Let's look for a perfect example here. Okay, look at this one here. At this point here, it was previously an uptrend. So let's see the here. So we have our higher high, our higher low, and then we have this higher high here. And then we have this normal low. And then this, guys, look at this. The break of here is our change of character here. Look at this. This one was not a pullback. This one is the break change of character here because it break here. It broke through this recent lowest point. Now, let me show you guys something real quick. Let me show you guys something. Let me draw this again. Look at this. From here, we have higher high, higher low, higher high, right? Now, this would have been our point of interest like this. Remember, our point of interest. And then our normal horse would have drawn our Fibonacci like this. And then this one would not have been a pullback. Say, okay, this is not a real pullback. We're waiting for a real pullback. And that's what happened. The market came like this, go up and give us what a real pullback. So we have been waiting for opportunity to buy this market here. Remember, I said in an option, you're always anticipating. We're always going to anticipate buying. In an option, we're always going to be anticipating buying. So we're going to be looking for opportunity to buy here. And then we're going to be looking at an order block. There's an order block right here. This would have been the other block here. And look at what happened, guys. This is how the market will trick you guys. See, me myself, I would have taken this trade because the market tapped into the other block. But look at this. It tapped into the other block, go beyond it a bit, and then start giving us a push to the upside. A lot of people would then think, yeah, okay, this is now going up, right? Put your stop loss like this, and you take profit like this, which is very, very logical, guys. That is why I'm saying, even as a pro trader, there are sometimes you take stop loss because something like this, even me for instance, would have actually fall for something like this. All right, I would have actually fall for something like this because look at this. It got to our other block and it started giving us what? But then there are a lot of things when we start getting to liquidity and there are ways we will not actually fall for this. But this is a very easy trap to fall for. But look at this. The market just brought through it like this. All right. Go through it like this. So, guys, that's one thing with trading. That if we have risk to reward like this, even if you take 5 trades, 10 trades, sorry, and you lose 5, you win 5, you will still be in profit. Look at the risk to reward. Look at the risk to reward, right? So we're going to be talking more about all that as time goes on. So this becomes a change of character here. Change of character. The market breaks what? Let me get these ones off. To give us what? A change of character. Hold on. This becomes our change of character. What's wrong with my network? Guys, can you still hear me? Can you guys hear me?
Yes, sir, we can hear you, sir.
Yeah, yeah. We are
Okay.
here.
So that becomes our change of character. I don't know what's on my network. So that becomes our change of character. So that's how change of character happens. That's how change of character happens. So the next thing we're going to talk about is advanced market structure. That is another important topic right there. Advanced market structure. And what advanced market structure tells us is now see there are a lot of things that are not diagram perfect here. Now look at this, guys. Before I go into advanced market structure, look at what is happening here. Let me show you something. Look at this. I don't want to be biased, right? Let me just show you the real thing. Look at this. Look at this move here. From here, we have this high, this higher high here. But look at this one here. It did not respect the 50%. So what about this? What's all this? What is all this? Does it mean that the market is going to, all this one here is still one move? Can we say this is this? It's still one move because it has not really given us that? Can we say
Yes, sir.
that?
Yes, because it has not reached the 50%,
You
below
said what?
50% of the Fibonacci.
That's not going to 50% of Fibonacci. But if you drag it like this,
Yes, sir.
look, hold on, let me show you something. If you drag it like this one has actually tapped into 50% of Fibonacci. And then, look at this. There's an other block here that it actually respects. So guys, there's still a lot of things you need to understand. What is this? Does it mean that at some point in time, the market is going to come here? Now, to do that, when you see something like this, you need to go to the next highest time frame to see this clearly. You need clarity. That's why once we get to time frame analysis, you need to be able to understand this whole thing properly. So let's see what happens on the weekly time frame. Let's see what's happening on the weekly time. I think I'm going too far, kind of, and then we're going to see things way more clearly. Way more clearly. All right, let's see what is happening here. My network is slow. We need more data here. All right. Okay. Okay. Now look at this. According to this is a downtrend on the weekly time frame. So from here we have what? Our lower low, our lower high, our lower low. And what is happening? Lower high. Right? Guys, are you following this? I see. What are we
Yes,
going to be expecting here, guys?
a lower low.
A lower low. So guys, you need to be able to understand time frame analysis. So all these things happening here,
Hello, sir.
all this gap here, it means that at some point going to get filled. Go ahead. You want to ask a question? All right, so look at this here now. This is our point of interest. Our point of interest. Right? So, sorry. Okay, this is it here. So here we're going to then do this one for a downtrend like this. So this one has went into what? Over the 50%. So we're expecting a kind of a massive sell. Massive sell on Euro USD. So you need to be able to understand this whole thing. Anytime you see something like that, there's always a reason for it. There's always a reason for it. Let me go back to the daily time frame. Let's go back to the daily time frame. So you can see this clearly. Anytime you see something like this, there's always a reason for it. So we're already talking about advanced market structure. There's always a reason for it. So let's go back here, see this properly. So look at this. There's so much irregularities here. Look at this. Look at this. There's fair value gap here. Once that gets to fair value gap, you're going to understand. There's a gap here that needs to be filled somehow in the future. And this one looks like an option. So why is it that this gap did not get filled? Does it mean that this gap is not going to get filled? Does it mean that market? But then going back to the weekly time frame, we saw that it's actually a downtrend. That later in the nearest future, the market is still going to come back to fill all this gap. Again, you're going to understand this whole thing properly once we start talking about. Let's go back to our distance. So I've already talked about market structure, break of structure, chain of character. What we're talking about here now is advanced market structure. So the next thing we're going to talk about tomorrow. So tomorrow we're going to do revision of market structure again. and then we're going to get into point of interest. And in point of interest, we're going to be talking about order block, fair value gap, and then things are going to be getting much more simpler as you understand this whole thing. So we're going to talk about point of interest. We already get into a bit introduction into point of interest. We already know what that is, and then we're going to go into order block. Order block and fair value gap are also point of interest. So we're going to talk more about that, how to locate them, how to understand them, and all that. And then after that, we're going to talk about liquidity, then top-down analysis, then entry. And after all this, guys, you'll be able to trade gold, sniper entry perfectly, and make consistent profits. I hope this class we had today, we have been able to learn something new and something great today.
Yeah, totally, yes.
All right. All right. So I'm so glad this video is being recorded. I'm going to post this video on YouTube so you can always have access to it, all that. And again,
And
I'm actually going to this whole section is not this whole section of gold trading and everything. This whole series is not for free, right? Is not for free. I actually would be posting this video in the free Telegram channel. This is the day one. I'm going to be posting this in the free Telegram channel. So if you are watching from the free Telegram channel, this is not for free. So if you want to be a part of the next class, you'll have to send me a DM. It costs $50 to join this series, and then you are going to get insight like this. We're going to understand and break everything down one step at a time like this, and then you're going to understand everything. And then in no time, in a few weeks from now, you'll be able to trade gold. So, guys, I'm not doing magic. I am not doing magic. It is real. And then you're going to understand. I think with this class, you have a bit more clarity. You have a bit, guys, after tomorrow, we talk about point of interest. You're then going to understand that this thing is not even that difficult. It is not that difficult. And then, guys, once we now go down to top side at top 10 analysis, guys, once you want to enter, the reason my entries are also always sniper entries are because I use small time frame, like 15 minutes to 5 minutes, sometimes even 1 minute for my entry. So I used to have perfect entry. So but then you need to understand top-down analysis before you understand entry in the first place. And for you to understand top-down analysis, you need to understand point of interest, you need to understand market structure and all that. So we're taking this whole thing one step at a time. So thank you guys for joining the live section. If you are watching from YouTube, subscribe to my YouTube channel and give us a thumbs up. So thank you guys for joining. We're going to see again in tomorrow's class. Take care.
okay, hello.
Yeah, go ahead.
Can you hear me?
Yeah, go ahead.
We are going to keep having classes till we are done with this, yeah? Every day, yeah?
Yes.
Thank you so much, sir.
Yes.
Same time.
The time will varies, but I'm going to be giving 1 hour notice before because I have also have a lot of things I do. I'm a very busy person. I'm into real estate and all that. So the time is going to vary, but I'm going to be giving 1 hour notice before I go live. All right.
Okay, that's fine.
Yeah.
That's fine. Thank you very much.
You're welcome. So I'm going to be
Are we
ending the
still
live.
are we still